Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this webinar on financial forecasting. Thank you for being with us today. If you have any questions on any of the matters raised in this webinar, can you please send me an email, peter@essbiztools.com.au. We were going to have a live feed, but we've been unable to organise that. Next time we will try to have a live feed to Facebook. About 3 weeks ago, the Academy of CPAs presented a webinar that featured an American accountant, Adam Hale, from Summit CPA in Indiana, who gave an overview of the new types of services that his accounting firm had pioneered in the USA. And basically what it was saying that the budget, cash flow forecasts and projected balance sheets were the prime document, and every business client should have that. And the client should then agree to have a monthly ongoing process. Now, the process could be delivered weekly, bi-monthly, or monthly. Today, every one of their clients is signed on for the financial forecasting, which is a 5-year projection as to what the business is going to look like in 5 years' time. 90% of the clients elect to have Summit CPA handle their compliance matters, and about 1/3 of them have contracted Summit to provide their back office services, paying their bills, doing a whole stack of processing. What we're going to look at today is the beginning of the financial forecasting, because this is the crucial area. And over the next 2 months, we're going to be presenting a series of these education events to acquaint you with the processes that we have now implemented within ESS BIZTOOLS to enable Australian and New Zealand accountants to be able to make these types of presentations to your clients, to act as the virtual CFO. So thank you for joining us. And as I said, if you have any questions, please send me an email, peter@essbiztools.com.au. I'm just going to share my screen and then we can get started on this process. After that webinar, Andrew Gettis made this comment. It's a new business model. I think it's going to revolutionize the sector globally. Now, Andrew is, in my opinion, an Australian accounting industry guru. He's been around for a long time now. I first met him a long time ago, and he was at the University of New England in Armidale in those days, where he went on to become a very well-known Australia, New Zealand, United Kingdom accounting coach and mentor. But he was also chair for 10 years of Green Cross, a top 200 ASX company that he originally advised 35 years ago and remained a key consultant to them, and 15 years ago become a director, and then after 5 years become the chair of that company. He thinks this is going to revolutionize the sector globally, because it's really showing to accountants how you can act as the virtual CFO. What do you think? Do you think this type of activity will revolutionize your firm? We start with the financial forecasting journey. The first thing is to understand the business of the business. Now, this is not normally in an accountant's brief if all you're doing is preparing a set of annual accounts and a tax return. I had first-hand experience at this sort of processing because for 12 years I was the chief financial officer in a listed public company that had operations in 3 states of Australia. And I was also the company secretary. So I understood the necessity for accountants to have a clear understanding of what the business of the business was. We were in the meat industry. We had meat works, boning rooms, hide stores, retail butcher shops, delicatessens, cold stores in the 3 eastern states. There's a lot of business of the business to get your head around when you've got that sort of operation. And the accountants that were working for me had to do that. It's no different if you're offering a virtual CFO service for your clients. You need to understand the business. What are their facilities? What operations have they got? Have they got cold stores and storage facilities, workshops, processing factories, retail environments, offices, farms? What else have they got? And how does everything fit together in those businesses? You need to understand that if you're going to logically prepare state-of-the-art budgets and cash flow forecasts and projected balance sheets. Who are the suppliers? Where do the suppliers come from? Of raw materials? Are they coming from overseas? Is there likely to be any embargoes, any problems because of international conflicts? And if so, what effect is this going to have on the business? You're preparing a budget and a cash flow forecast. So should you be factoring in that supplies might have to be purchased from some other location? Or should there be an attempt to stockpile raw materials as soon as possible? What's the financial investment going to be to achieve that? You need to be asking that question so you understand that. What's the organizational structure in this business? Is there a competent leadership team? Are there foremen or leading hands, supervisors involved in all aspects of the business? Are these people receiving reports back, key performance indicators, weekly performance reports? What do they require out of the budgetary process? I think they need to have the budget for the operation that they're responsible for and the key performance indicators that relate to that operation. How many meetings are held in this organization? Is there a daily meeting of every team so they can work out what went wrong yesterday, what's got to get done today, what never got finished yesterday that should be finished today? Key performance indicators I've already mentioned. These are a vital byproduct of the budgetary process. And training. Does your team need some more training? Might need some familiarization training in the business of the business for this particular client. So you should be factoring that in to your costing of the work to be done. But perhaps you will be making suggestions to your client that some of their team members need some additional training. Let's move on to the next item, market research. Now, most accountants will say to me, we don't do market research. Some of you do. Some of you have people working for you. But if you're going to be the virtual CFO and there is someone doing market research, and it might be an employee within the organization, it might be an external consultant, probably more likely to be. But if you were the employed virtual CFO, you wouldn't just accept what the marketing research person gave you without subjecting it to some due diligence review. For argument's sake, I've seen projections come back at times where an average sale might have been about $180 in a business. And when you looked at the market research, the average sale was going to go to $480. Now, I think it's reasonable as the virtual CFO to be asking the marketing consultant to come in and have a cup of coffee with you and say, how do you explain going from by an increase in average sales of about $300? That's about 250%. What's the basis for that? Now, there might be a great explanation, but unfortunately, I think there probably will not be. You just don't get price rises of that magnitude. And if we're going to have that sort of price rise, you as the prime author of the budgets and cash flow forecasts need to know the answer, because budgets and cash flow forecasts and projected balance sheets get handed around to all sorts of people, to the directors, who mightn't be very impressed if you cannot answer that question. How come average sales has gone from what did I say, $180, $190 to $380, $390. What caused that? You need to be able to answer that. So you need to have the confidence in your ability to be able to sit down and have a conversation and perhaps a debate with the market research author. Because you've got to remember that the financial forecasts are going to be based on this market research. This is the trend. We can't have the market research over in one side and the financial forecasts over the other, and there's a great gulf in between. I've seen that happen, actually. But it can't work because it gets destroyed in the due diligence process and the business will miss out. So think about it. We need to make sure that you are confident in your understanding of all this to be able to do that. We then move into the business plan. What's the firm's vision? Where's the firm want to go? What's the journey that we're on? The challenge is to create a financial interpretation of what's contained within the business plan. That's what this whole process is about. Is that going to be achieved? I think you should also be preparing the business plan. Now we can move into budgets, but before we actually move into putting figures into the software to calculate the budgets, we need to develop supporting schedules for things like inventory. What's the investment going to be? Are we going to have 3 weeks of raw materials on supply, or some parts of the year has it got to go to 10 weeks because of concerns about supply difficulties? What about inventory that you buy in to sell or to do some further processing on? How much investment is going to be needed in that? Because that's going to have a bearing on the cash flow requirements, isn't it? What's the labor in the business? How many units are they hoping to produce of production? The power supplies, electricity, gas, fuel, and other components of keeping the business operational. What's it going to be? If you factored in realistic costs for what those things are going to cost. Freight depends where you're sending your goods, of course. Production, debtors. What's the debtors days outstanding? Is it expected to be the same? People get a bit suspicious if the debtors days outstanding at the 30th of June was 88 days, and in the financial forecast, you're now going to show it coming back to 40 days. You need to have an explanation as to why that might occur. Creditors. Creditors should be closely monitored when you're doing cash flow forecasts. Is the business trading within the trading terms that the creditors have imposed? What would happen if they're not, and the creditors suddenly demand that payments are made strictly on a 30-day basis or even less? What's the cash flow effect of that going to be? And that's one of the reasons you're doing this sort of preparation, this work. What are the key performance indicators that come out of all that? Some of them I've given you an indication of just in those comments, and there'll be others. They should then get recorded so that on a weekly and monthly process, these KPIs can then be evaluated. What were they budgeted at and what are they actually? And if there's trends going the wrong way, management needs to be alerted. So what we're trying to do is to get your accounting firm to deliver a service to your clients who are accepting the financial forecasting process 52 weeks of the year, not just at the end of the financial year to do a tax return. Someone will be doing that as well, of course, but this is the ongoing operations. We can then move into cash flow forecast. You need to be conscious of what the bank's requirements are, what limits they've imposed, what reporting requirements they require, and make sure this is included in the overall document to remind people that part of the agreement is that there's 3 monthly financial accounts to be submitted to the bank, or 6 months, or a meeting held with them every 6 or 12 months. What's the capital expenditure program? Has it been approved by the board of directors? Is it realistic? How's it going to be financed? I've seen some of these capital expenditure programs worked out in the back of a old piece of paper, or even a beer coaster on one occasion, and pretty rough and ready. It needs to be documented to make sure all of the costs are included, so that we've got adequate cover in the financial forecast. Research and development can be a big area. And if you're a company and your client's trying to get the taxation advantage from the research and development, what is it going to cost? And what is the cash flow implications? Dividend payments can be a very big item to be included in the cash flow forecast, or loan withdrawals from which with owners who might not be in a company, but in a partnership. What's the drawdown of payments that's been agreed to? Factor that into the cash flow forecast, and make sure the taxation emerging liabilities are being calculated periodically, progressively, so that that taxation debt and on its timetable is being factored in. So it's not a big surprise that there's suddenly $300,000 to be paid in taxation that someone forgot to put into the cash flow forecast. And then we have the projected balance sheets. This is very important process to be examining what this business is going to look like in 2, 3, 4, 5 years' time. So you can say to your client, this is the result of the decisions you're making today and next year. This is what the business is going to look like in 5 years' time. But the key to all this, I think, is the monthly program. You've prepared the financial forecasts, the budget, the cash flow, and the projected balance sheets, and they're in place. But it's not a matter of then putting that in the bottom drawer and saying we'll resume the review of all this in a year's time. That's not the process. I think what you should be doing is saying we're now on a monthly cycle, 52 weeks of the year. So the client can sign on to a weekly service, or a bi-monthly service, or a monthly service. So as part of the monthly process, receive individual business units, management accounts prepared for each business unit, not all lumped together in one profit and loss account that there's no meaningful information. Break it down into managerial units. Who's in charge of this? Give them their P&L account and their key performance indicators every month, and a comparison to budget, so that they can see how things are working out. So that the team leaders, the leadership team, can sit around a board table at the end of each month with you as the virtual CFO in the business review meeting and review the financial results. This is what has occurred over this year. We're running a new education event in this series again on the 15th of September. So by then, hopefully you've had a chance to have a think about the delivery of virtual CFO services, and will be able to join us at that time. In the meantime, please visit our website, www.essbiztools.com.au, where you can have a good look at the material which we have developed to assist you to deliver these services. Thank you for watching this video. Once again, if you've got any questions, please send us an email, peter@essbiztools.com.au, or give me a phone call so we can set up a 45-minute, no obligation Zoom meeting with you and your colleagues. 1-800-232-088. Have a great day. Goodbye. Bloody hell. start a bloody video by the looks. Fuck. Doesn't record, does it?
I can't tell them. Processing recording.
Still coming up, start. Bloody. So I went on and did that then because